Hi, everyone. My name is Danny Sinowitz, and I am the College Dude. Today, we're going to learn about the American Opportunity Tax Credit in 5 minutes or less. Here we go. First, let's talk about what the American Opportunity Tax Credit is. A credit is different than a deduction. A credit actually allows you to get money back on your tax return as opposed to a deduction, which just lowers your income for that year. So, for this example, for the American Opportunity Tax Credit, you can actually get back $2,500 per eligible student per year for a 4 year time period. Now let's see who's eligible. So to start with the student, they must be pursuing a degree that's at least recognized as an educational credential. In other words, they can't be taking courses for fun. This needs to be courses that are actually taken towards a legit degree. They also need to be sure that they're enrolled at least half time per one academic period before the beginning of the tax year. So again, you can't just have somebody that's taking one course for fun. They need to be at least looking to pursue a degree. The other things you got to make sure of is that they previously didn't have 4 years of education in the beginning of the tax year. The other thing that you want to make sure of is that they haven't previously claimed 4 years of the American Opportunity Tax Credit before. You're eligible for up to 4 years in order to claim the American Opportunity Tax Credit. Anything beyond that, we'll talk about a different credit that you can look to claim. The other thing that's important is a student cannot have a felony drug conviction at the end of the tax year. So make sure you're staying clean. For parent eligibility, you want to make sure that you're within the income thresholds in order to claim this. So the first thing you got to understand is, what is your modified adjusted gross income? Modified adjusted gross income is going to determine if you're eligible for this credit or not. So in order to claim the full credit, there's two criteria you either have to go by. There's a single filer's criteria, then there's a married filing jointly criteria. If you're single and if you're single filing and you want to make sure that you get this credit, your income must be $80,000 a year or less. If it is, you're eligible for the full credit, that full $2,500. If your income is between 80,000 to 90,000, you're eligible for a reduced benefit. In other words, it will begin to phase out at that point. Anything over 90,000, you're no longer going to be eligible for the credit. If you're married filing jointly, those numbers double. So for married filing jointly filers, if you're under 160,000 of modified adjusted gross income, you're eligible for the full credit. Between 160 to 180,000, you're eligible for reduced benefits when the phase out takes place. Over 180,000, you're no longer eligible. In order to claim the credit, you're going to have two tax forms that you want to be aware of. The first is a form that you're going to receive from the school. This will be coming when you receive your tax documents for the previous calendar year. So, in other words, for the 2022 tax year, I would have received this form in January of 2023. So, the form is a Form 1098T that you're going to get directly from the school. This is going to show how much tuition you actually paid. Key factor, though, in order to claim the American Opportunity Tax Credit, the dollars that you spend must be after tax dollars. They cannot be coming from a pre-tax vehicle or a tax-deferred vehicle, such as a 529 plan or a Coverdell savings account. So you want to make sure that if you're going to be using and taking advantage of the American Opportunity Tax Credit, that you are paying for tuition and that you are paying for paying the funds with after tax dollars. The other thing that you're going to be getting is a Form 8863 form. That form, I shouldn't say you'll be getting it. You'll be attaching that to the 1040. A tax preparer or CPA should be able to help you with that. But that being said, that Form 8863 form is where you're actually going to fill out the credit. And then for each child, you're going to want to make sure that you attach that number to what that's supposed to be. So in other words, if you have 3 children and you paid $4,000 for each child, you'll be eligible to get that $2,500 back times 3. So $7,500 back in terms of a tax credit that you'd be eligible for if you paid $12,000 total. So that's it. That's the American Opportunity Tax Credit in a nutshell. I hope you enjoyed this and I hope you got some value from it. The big things that you want to take forward from this: number one, see if there are ways that you can lower your modified adjusted gross income if you're close to or in that threshold. If you can lower that, you can get an increased benefit or the full benefit. The other things that you want to keep in mind is that these plans or these types of credits, you want to make sure you speak with your CPA and your accountant to make sure that you're not making any other mistakes as you do this. I'm Dan Sinowitz. I'm the College Dude, and I look forward to seeing you again soon.